Good morning and thanks so much for tuning to the Trade Setup with me, Niraj Shah. Let's take stock of what's happening globally and then in India. So remember, US markets had a quiet kind of a day. Nasdaq was up about 0.5%, but not in the red. Unfortunately, futures are marginally lower, if you will. And when you look at the Asian bourses as well, I'm just trying to look at the global cues. They're not necessarily having the best of starts. Japan is shut today. Some of the other Asian markets too. Trading mixed, if you will, with maybe a bit of a downward bias, and which is why the implied open suggests about a minor 40%, 40 point odd downtick in the session today. Now, you know, if you just look at the broad trade setup, and then I'll come to what a lot of people believe is the big elephant in the room. I personally don't, but I'll come to that in a moment. I'm not giving it too much of credence at the start because I don't really think it'll be that big a market mover. But I'm talking about the Hindenburg report. But first, the index is oscillating in a broad range, but downsides seem to be limited. I think the market is showing its bent that after that 1,000-point cut that happened from 25,000 to 24,000 or thereabouts, the market got in the mood of wanting to buy into the markets. The positioning seems to be suggesting that. In fact, talking to smart money, we've been making tactical buys since last Thursday. Remember, earnings season has just gotten over. There is a slew of conferences lined up. In fact, starting today, tomorrow and day after, we are covering the MK Investor Conference as well, wherein a clutch of corporates will be coming out and making their case of what business is showing up. And I would reckon that there will be some bit of money flows into the Indian markets, both local as well as global, into bottom-up ideas. So that's to be kept in mind. You know, the Hindenburg report-led dips, if any, will be bought into. In fact, almost everybody that I've spoken to yesterday on what the impact of this could be, if at all, have said that they would be very happy if there is a dip that comes in because of this report, because they would want to buy into that. They give near zero credence to what the allegations are with regards to the Hindenburg report on SEBI Chair Madhabi Puri Buch. And their statement out there, and I'll come to that at the end to just tell you what they have said with regards in their defense. There is statements by SEBI, statements by AMFI, statements by Madhabi Puri Buch and Double Buch themselves, all of them on the NDTV Profit social media handles and on our website. You might want to tune in and try and see the point-by-point rebuttal that they've given to some of the allegations that have been made in the Hindenburg note as well. I would urge viewers, frankly, if you have time, independent of everything else, it's a case study worth seeing. But be that as it may, the mention is that if there is a fall, they will only be happy to buy into. I frankly don't even think that there will be a big fall. And that's why the whole piece, I've kept it at the end. Let me first get the stocks out of the way and one of the key stocks to monitor in the session today, because they will move independent of what's happening in the market. Amara Raja could be interesting. They've signed an MOU with Piaggio India to develop lithium-ion cells, battery packs and chargers. So they are moving in the game as well. Their Exide was with regards to tie-ups that that Exide has done, and with manufacturers and with end customers, and I think Amaraja is now going that way as well. Aavas Finances could be interesting because CVC Capital is up 26% stake in the company for 3,425 crores. They will also make an additional 26% stake in the company via an open offer. So watch out for Aavas Finances. Could be a bit of a reaction in the session today. Then a clutch of results. I'll start off with, well, Aurobindo, the big one, was in line, mind you, but seemed decent. Revenues up 10%, 7,567 crores. EBITDA margin at 21.4 versus 16.8. Really strong set of EBITDA margin delivery, and profit after tax up 61% at 918 crores versus 570 crores. It's a very strong quarter, in line, but a very strong quarter. I would suspect that there could be a bit of a reaction on this one. So do keep an eye out for Aurobindo Pharma in the session today. Metropolis also. And the really strong ones come after this, but Metropolis up 13%, decent numbers on the top line, in line with what they have guided. Amira Shah has been talking about it, but the bottom line was up 31% at 38 crores versus 29 crores. So strong showing. EBITDA margin for Metropolis at 25.2 versus 22.7. So strong EBITDA margin performance, strong bottom line, has done well, could do well. PNC Infratech is the third one that I want to highlight. Revenues were up 4% at 2168 crores versus 2092 crores, but there were some one-offs. One-off settlement done which aided the revenue. Leave that out, maybe the revenue number may not have looked that strong, but because there were one-offs in the revenue, it flew to the EBITDA, as a result of which this very unnatural uptick in EBITDA margins. Usually, construction companies may not have such jump in margins. unless there was one-offs in the previous quarter, but there were one-offs in the current quarter, as a result of which EBITDA margin and PAT look very, very strong. Good numbers, not as strong as optically it looks, but the stock may react, so keep an eye out for that. Inox Wind, decent numbers, revenues up 83% at 639 crores versus 349. Mind you, viewers, though, can we just stick with that plate for a moment? Mind you, these numbers, 83% uptick is a very strong number, but there was a small miss on execution, by the way. Otherwise, the numbers could have been better. So the numbers technically are in line with what some of the brokerages who track this very closely had penciled in, or maybe slightly lower. But the margin performance was very strong, 21.3 versus 9.2. The only thing, the management has said that the margins were unnaturally higher because of some different modes of execution, and I think they will come back to about 16-17% yet. 16% versus 9% is not bad. PAT numbers look solid, 250 crores versus a loss of 65 crores. Just that at a market cap of near 20,000 crores, the stock is not cheap. So bear that in mind. They may maintain the execution guidance for FY25-26 at 800 megawatts and 1200 megawatts. So this is the big thing. May see a bit of a reaction here in Inox Wind today, so keep an eye out. The only thing, as I said, the hitch, it's an expensive stock. Now some strong Q1 numbers came in for Atul Auto, revenues up 126%, EBITDA at 75 crores versus a loss. So Atul Auto is the first one on my list. EMS, revenues are up 49%, PAT was up 63%. Jyoti CNC, revenues are up 74%, margins at 25.9 versus 8.2. Very strong numbers. Watch out for this one as well as some of the other CNC machine makers. Balkrishna Industries, I thought, came out with a decent set of numbers as well, with all the uncertainties around tire companies and revenues and margins. We've seen what happened to Apollo. Look at Balkrishna Industries, revenues up 25%, margins at 24.4 versus 23.2, PAT up 47%. Very strong performance. Watch out for Balkrishna. May see a bit of a reaction today. Honasa, I don't know what the brokerages are saying, frankly, but I thought the margin performance was exemplary for this business. To move from 6.3 to 8.3 is quite spectacular. Net profit as a result up 62%, very likely could react. PSUs were a mixed bag. Shipping Corporation, very strong set of numbers. Operating margins expand a little bit, PAT up 69%. To be expected, G Shipping had good numbers too. The problem is with the others, very expensive names, Midhani as well as Bharat Dynamics. Both of them had numbers which left a lot to be desired. Midhani margins cracked in BDL as well. Revenues down 36%, PAT down 83%. These are very expensive stocks. May react negatively. Watch out for these. Weak results for Vinati Organics and Suven Pharma. In Vinati's case, margins came off, PAT down 19%. Suven Pharma revenues were down 33% as well. Operating margins at 34% versus 48%. May correct. CESC may correct as well. Revenues were up 12.8%, but margin 7.6 versus estimated 20%. And net profit up 5.4% merely at 388 crores. The estimates or largely in line, but the margin disappointment could weigh in on CESC. So do watch out for that one in this session today. Lastly, a lot of you would think of whether the Hindenburg note on the SEBI chair may have an impact on the market or no. I really doubt. I really doubt. The point-by-point rebuttal from Madhabi Puri Buch's letter on what some of the allegations were with regards to the Hindenburg note. I mean, the investment in the fund referred to in the Hindenburg note was made before Madhabi Puri chair became the SEBI chair per se. I mean, then you talk of conflicts of interest. Seems a bit far-fetched, but I mean, never know. However, never know about the reactions that the market may say. But I repeat, that I personally don't think that the market will have a great reaction and or a great negative reaction on this. And people that I spoke to and experts in the market also don't believe that there will be a big reaction on the markets. I mean, they've spoken about Blackstone Group's results, and Blackstone Group, part of Madhabi Puri Buch's recusal list from the time she joined SEBI as well. So that's the other thing. SEBI chair's consulting firms became dormant post her SEBI appointment is the other rebuttal that they've given as well in the letter. So, I mean, a lot of allegations made have been given a point-by-point rebuttal by Madhabi Puri Buch and her husband Dhaval Buch. In fact, 361, which is formerly IIFL, has confirmed that that IP plus Fund 1 made no investments in the Adani Group shares, something that was a part of the allegation list that Hindenburg made out as well. So what's next? I mean, like I said, most experts are believing negligible impact on the Indian markets due to the Hindenburg report. In fact, people are saying that they are hoping for something to bring about an impact so that they can buy into the Indian markets, because the Q1 season has not been bad at all. Bottom up, some of the ideas are looking fantastic on the results reportage that they have done. So keep an eye out. I mean, there is a 40-point downtick that is visible at the implied open, but that's because all of Asia is marginally soft. I really don't think this note will make too much of an impact. If it does, like I said, most market experts say they will be happy to go out and buy into their preferred bottom-up ideas as well. So, well, that's that. Thanks so much for tuning into the Trade Setup.